All right, so you want to dive into this. You sent us some pretty interesting stuff about Goldman Sachs.
Yeah, looks like it.
I mean, we've got the Wikipedia article here,
hmm
a stock performance chart, even some handwritten notes. Someone's been doing their research.
Definitely someone's been hard at work.
Yeah.
I'm very excited to see what particularly caught your eye.
Oh, me too. And speaking of catching my eye, this little note here, 1869. Goldman Sachs goes that far back.
Oh, yeah.
I had no idea they were practically ancient history.
Absolutely. 1869, that's the American Civil War had just wrapped up.
Wow.
The Transcontinental Railroad was completed, and Marcus Goldman, a German immigrant, he decided New York City was the place to be.
Talk about timing.
Talk about timing, exactly.
So rewind back to 1869 for us. What was Goldman's big play? What was he actually doing in this post-Civil War world?
Yeah, so his original business was actually pretty straightforward.
Yeah.
Especially for finance. It was commercial paper trading.
Okay.
So imagine you're a business owner back then.
Right.
And you need some fast cash. So you go to Marcus Goldman. He buys your promise to pay, basically an IOU, at a discount.
Okay.
Then he turns around and sells that IOU to someone with, money to spare, someone looking for a return. So he essentially connected businesses needing funds with those who had capital.
Okay, so kind of like an old school version of peer-to-peer lending, but with Marcus Goldman in the middle making it all happen.
Exactly.
I like it. And the Wikipedia article mentioned Goldman Sachs was a family business for ages. Sons, sons-in-law, the whole deal.
Yeah.
Which is a far cry from how today's corporate giants usually work.
It really is. And, that family structure, it was a double-edged sword. On the one hand, it meant trust and loyalty. Crucial back then, especially when financial regulations were practically non-existent.
Right, because doing business with family, it just hits different. There's just an inherent level of trust already there.
Yeah, you're doing business with family.
Right. A handshake meant something back then.
Exactly. But that same closeness, it could also hold the firm back.
Right.
You end up with a very specific set of viewpoints and experiences, potentially stifling innovation and creating blind spots.
Yeah, you don't want to rock the boat if it means Thanksgiving dinner's going to be awkward.
Exactly.
So how did Goldman Sachs go from this family affair to, the global powerhouse they are now? I'm seeing some major milestones on their Wikipedia timeline. Going public in 1999, the 2008 financial crisis.
Yeah, that's where things get really interesting. Goldman's journey, it's marked by these pivotal turning points, these moments that force them to adapt or, frankly, get left behind. Going public in 1999, huge turning point. Before that, Goldman was a partnership. The partners, they shared in both the profits and the risks.
Okay.
Much like, a group of friends pooling their money for a venture, right? Going public meant selling shares of the company to anyone who wanted in. Now, this brought in tons of new capital, but it also introduced new pressures to prioritize shareholder returns above all else.
So it's like trading a close-knit family gathering for a massive stadium concert. More people, more energy, but also a higher chance of things getting a little out of hand.
Yeah, absolutely a good analogy.
And speaking of things getting out of hand, there's the kind of elephant in the room, 2008. It's right here on the Wikipedia timeline, and your notes have 2008 reputational risk scribbled in the margins.
Rightfully so. And this raises a critical question. What role did Goldman Sachs play in the 2008 crisis? And why does it still matter today?
Okay.
Without getting bogged down in the complexities, Goldman was heavily involved in the mortgage-backed securities market.
Okay.
Those bundles of mortgages that ultimately played a huge part in the meltdown. Their practices, along with those of other major institutions, contributed to a situation where risk was underestimated, and the entire financial system teetered on the brink of collapse.
Okay. I'm starting to see why this deep dive is so relevant for you. I'm guessing your upcoming meeting involves navigating these very waters.
It's certainly a major factor, yeah. And understanding how Goldman navigated those tumultuous times, both the crisis itself and the public's reaction to it, could offer valuable context to your meeting, absolutely.
Absolutely. So how did Goldman respond to 2008? Did they just, weather the storm? Or did they have to make some serious changes?
Oh, they definitely didn't come out unscathed. They did. Goldman Sachs accepted a government bailout,
Yeah.
though they were quick to repay it.
Okay.
And they implemented some internal reforms, but their public image definitely took a hit. They became a symbol, for many, of Wall Street excess, recklessness.
It's like that saying, it takes years to build trust, but seconds to break it. So how have they been rebuilding that trust in the years since? Their stock chart shows a bit of a roller coaster ride, but they're still one of the most profitable banks out there. And I'm seeing another note here, Marcus Consumer Banking. What's that about?
Excellent catch.
Yeah.
That ties directly back into our 2008 conversation. So Goldman has been diversifying, moving into new areas like consumer banking with their online platform
Okay.
Marcus. They offer, high-yield savings accounts, personal loans, aiming for a less Wall Street and a more Main Street vibe.
So a bit of a good guy makeover,
Yeah.
trying to show they can serve everyday people, not just the big corporations and wealthy investors.
It's a fascinating strategy.
Mhm.
By expanding into consumer banking, they're not only potentially diversifying their revenue streams,
Right.
but also trying to cultivate a different kind of relationship with customers, built on accessibility and transparency.
Okay.
Remember, their reputation took a hit after 2008.
Yeah, for sure.
So this could be their way of demonstrating they've learned from the past and are committed to being a more, shall we say, responsible player in the financial world.
Almost like saying hey, we're not just those suits on Wall Street anymore. We can be your friendly neighborhood bank too. But speaking of Wall Street, their stock chart tells an interesting story.
Okay.
It's been trending downwards lately.
Yeah.
What does that mean for Goldman Sachs, today?
Well, deciphering a stock chart, it's a bit like reading tea leaves, right? No guaranteed predictions for the future, but it can offer clues.
Okay.
The dip in stock price might indicate investor concerns about challenges facing Goldman, like, for example, increased regulations in the financial industry.
Right. After 2008, there was that big push to rein in risky practices on Wall Street.
Exactly, exactly. And that increased regulation, it often means higher compliance costs for institutions like Goldman Sachs, leaving them less room to maneuver.
Okay.
Then there's the competition from, tech-driven finance. Fintech startups, even major tech companies, they're dipping their toes into financial services, offering slicker, more user-friendly platforms,
Right.
which could be, frankly, more appealing to a younger generation of investors and consumers.
It's like Goldman's caught in this pincer movement, more rules on one side, tech disruption on the other.
Yeah, they are.
So how are they adapting? Are they dinosaurs heading for extinction? Or are they evolving?
They're definitely not standing still. Goldman Sachs is investing heavily in technology, both to improve their existing businesses, but also to explore new opportunities in areas like digital asset management, for example.
Okay.
They're also aiming to leverage their expertise in data analytics, risk management, to set themselves apart from competitors. They're striving to become a blend of traditional financial powerhouse and agile tech company.
So they're taking their old school Wall Street playbook and just adding a digital chapter.
Exactly.
What does that mean for their future?
That's the million-dollar question, isn't it? Goldman Sachs' future, it's tied to the future of finance itself. A future where regulation, technology, and public sentiment, it's all constantly shifting.
Right.
If we zoom out a bit, their trajectory reflects a broader trend. Even institutions with centuries-old legacies, they can't afford to rest on their past achievements. They must constantly reinvent themselves to stay relevant in an increasingly complex and rapidly changing world.
Yeah. It's like survival of the fittest, even in the world of finance.
And speaking of which, your notes have one final question that really jumps out. Goldman Sachs force for stability or instability? I can
Yeah.
see why that's on your mind. And that, my friend, brings us back to you. We've delved into Goldman Sachs' long and intricate history, their early successes, pivotal turning points, current challenges. Given everything we've explored, what's your perspective? Is Goldman Sachs, with its immense influence and reach, ultimately a force for stability or instability in the global financial system?
It really is the million-dollar question, isn't it?
It is.
We've covered a lot of ground here, their history, how they've evolved.
Yeah.
But you're right. There's that note in your handwriting,
Mm-hmm.
impact on the world today. I'm guessing that's what this meeting of yours is really about, huh?
It's at the heart of it, for sure. And it gets overlooked a lot.
Mhm.
People see Goldman Sachs, they think finance, investments. But their influence, it goes way beyond that. We're talking about a company that's been involved in some of the biggest mergers, acquisitions, global deals, you name it.
Deals that reshape entire industries even.
Exactly. But it goes even deeper. Think about the individuals who've worked at Goldman Sachs, right?
Okay.
The alumni who've moved on to, incredibly powerful positions
Mhm.
in governments, regulatory bodies.
Wow.
They're shaping policy, the very rules of the game. It really makes you wonder, are they shaping the financial landscape or are they becoming the landscape?
Whoa. It's like everyone else is playing checkers and they're like running the whole chessboard.
Yeah,
No wonder that force for stability or instability question is so thorny.
right. And there's no easy answer, but what's important is that you're asking it,
Hmm.
that you're thinking about it. And that's what this whole deep dive is all about. It's not about giving you a pat answer. It's about giving you the perspective to walk into that meeting, not just informed about Goldman Sachs, but equipped to understand their role in the context of your work, your goals.
Yeah, it's like we've given you a new set of lenses to view not just this one meeting, but like the entire financial world through.
Exactly.
So as our listener gets ready to dive headfirst into this meeting, any final thoughts?
Just this. Every decision Goldman Sachs makes, whether it's, a billion-dollar merger or a tiny policy tweet, it creates ripples.
Mm-hmm.
As you go into your meeting, think about those ripples,
Yeah.
because understanding them, that might be the key to finding the answers you need.
I love that. Okay, listener, you've heard it here. Go forth and conquer that meeting. We're rooting for you.
Absolutely.
And for everyone else, thanks for joining us for this deep dive into